Keep your money in Africa. Experts are cautioning South African investors considering foreign direct investment into the UK and the EU. With global markets in a state of flux, they suggest that direct investors focus on local investments instead. Let's get some insight from risk management and private equity expert Martin Soderberg talking to us from Oslo. Very good morning to you. Why stick to Africa?
Good morning, Jane. Well, despite the COVID pandemic, we still believe in Africa. We see a lot of growth over the last few years. 7 out of 10 of the fastest growing economies have been on the African continent. Obviously, growth rates have slowed down, but there's still opportunity. Africa has a fast-growing youth population. Median age in Africa is around 19 years, whilst in Europe it's around 40. This opens up for opportunities. By 2040, we believe that 40% of the world working population will come from Africa or have an African background. So there's a lot of things happening.
All right, how do you spot opportunities in Africa?
Well, we have the challenge is whether to invest in private equity or in the stock markets, because the South African stock market represents about 65%, I think, of the market cap on the continent. And it does not always reflect exactly what is happening on the ground. That's why we've chosen private equity. But it's not always easy to identify who to back. We have a network of contacts across the continent, and so we receive opportunities every now and then.
I know there's a fear factor when it comes to investing on the continent. I mean, how do you get over issues like transparency? How do you make sure that what you're investing in is something that is legit?
Well, we spend a lot of time looking for good management. That's one of our key focus areas. We try and get to know the managers, the owners. We follow the company for some time. And then obviously DD is an important step. We have to make sure that their financial situation is okay, that they pay their taxes. We spend a lot of time looking at governance and ESG matters. So it's information that is available.
And the sort of returns you can expect, and I know that's a broad sweep of a question, as opposed to what we're seeing happening in the UK and the EU. I mean, Brexit has had a devastating impact.
True. The returns can be quite high, but there's more uncertainty, and I think the time factor here plays, can cause problems. But yes, we see opportunities here. There's less competition. If you were to invest in Europe, you have a number of, there's more competition. You find an opportunity in Africa and you might be the only one looking at it. And also the banking sector is not as developed on the African continent, with the exception maybe of South Africa. So entrepreneurs struggle to find funding. So if you have the funds available, you can actually make a big difference.
And what do you mean when you say that investing in Africa, you'll be leaving a positive footprint for many years to come?
Well, yes, for every dollar you spend on the African continent, that will contribute to consumption, to growth. Africa still needs a lot of investments primarily in infrastructure. Infrastructure will drive most countries, and there's a deficit. So every dollar that we leave for Africa will contribute in a positive way, rather than spending that same dollar elsewhere.
Good to talk to you, Martin Soderberg. Thank you very much.